Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Thursday, August 7th. In today's episode, we'll tell you about the latest tariff threats from President Trump that sent the markets lower. We're also recapping earnings from McDonald's, Shopify, Disney, Uber, AMD, and Snapchat, all in this episode. It's a jam-packed day. Let's go. Stocks were back in the red yesterday, with the S&P and Nasdaq losing about 0.5%. The S&P now closed in the red 5 out of the last 6 trading days, so it is in a bit of a funk right now. One possible reason for yesterday's drop might be the comments that President Trump made in a CNBC interview. I think the quote that probably had the biggest impact on the markets was when President Trump said that tariffs on semiconductors and pharmaceutical imports would be announced within the next week or so. He followed that up by saying that pharmaceutical tariffs could be up to 250%, so that was a bit of a shocker. He also didn't give any trade deal updates with China. The two countries currently have a trade truce which expires on August 12th, and while there's chatter about a potential extension to that deadline, we've gotten zero details so far. So it has been a rough few days for the markets, and things might end up getting more volatile depending on new tariff news coming in from the White House. Anyways, we got a lot of earnings left to talk about, so I'm still locked in. I'm kind of tired of covering all these earnings. Maybe just another week left. Let's start with Disney. Disney's Q2 numbers were solid across the board, and they even raised their guidance thanks to their growth in streaming and the theme park division. Disney's overall revenues were up 2% from a year ago to $23.6 billion, and their net income more than doubled to $5.9 billion. So the bright spot in their earnings was streaming and theme parks. So let's start with streaming first. Profits were up 6%, and the company expects to generate $1.3 billion in profit for this year. So you do have to give it to Disney on the turnaround because they used to lose billions of dollars a year, and now they're expected to see over $1 billion in profit. Disney Plus and Hulu subscribers continue to grow, so now they have 183 million subs. It's no Netflix numbers, but it's pretty respectable. Then you have the Disney Experience division, which includes their theme parks and cruises. That's on a nice jump. I mean, it is summer, so revenues are up 8% and profits were up 13%. It wasn't all good news for Disney, though. Traditional TV saw revenues drop 15% and profits drop 28%. But yeah, the markets didn't respond too kindly, and Disney was actually down about 4% after earnings. Let's shift gears and talk about Uber. They reported earnings this morning and they beat revenue estimates and announced $20 billion in share buybacks. Their revenues jumped better than expected to $13 billion, and that was thanks to a strong demand for bookings. So the number of users using their platform increased 15%, and the number of trips on the platform jumped 18%. Uber is actually trying to get more people to use their app, so they say that in their top 10 markets, only 1 in 5 adults use their app monthly. So they're seeing this as a good thing, as plenty of room to grow for their business. And Uber is also investing heavily into autonomous rides. They now have over 20 autonomous vehicle partners globally, including Waymo, Baidu, and they plan to launch 5 more developments in the second half of this year. They also expanded their operating zones in Austin with Waymo. A fun fact, they say that an average Waymo vehicle is already doing more daily trips than 99% of human drivers. So this is huge for Uber because it means more revenues for the company. Uber stock actually went unchanged after these earning results. McDonald's shares are rising after the fast food giant ended a 2-quarter slump. Their global sales grew by 6% in Q2, and same-store sales in the US grew by 3%. McDonald's has been struggling to grow sales in the US for some time. Last quarter, their same-store sales dropped by more than 3%. Then the quarter before that, it dropped more than 1%. So they're finally back into the positive territory, and it looks like some of their new menu items and marketing blitz is bringing customers back. McDonald's share actually went up about 5%. Next, shares of AMD are down this morning after their AI chip business saw a slowdown in Q2. They blamed the slump on export restrictions to China. AMD did say that they created a new chip called the MI350, which fits the US's export rule restrictions for China, and they do expect to ramp up production in the second half of this year. AMD's data centers, which includes their AI chips, saw revenues grow by 14% year over year. That might seem good, right? But Nvidia's data center business saw a jump by 70%. So these companies aren't even in the same league at this point. Shares of AMD are down nearly 5% this morning. Next, Shopify delivered a standout performance. They posted revenue of $3 billion. That's up 30%. And Shopify said that they don't anticipate any tariff impacts, and investors were loving this. Shares jumped 22%, reaching 52-week highs. Finally, let's talk about Snap. Their shares are down after the company delivered underwhelming results for their ad business. Their total revenues grew by 9%, but the ad business, which makes up almost 90% of their revenue, only grew by 4%, whereas companies like Meta, Google, Amazon, and Reddit all posted double-digit solid ad growth. Snap shares are free falling, down more than 15% and counting. That's all for today's show. Keep navigating those waters. See you tomorrow.